In the following seminar on financial technology, also known as Fintech, the first of the session's two speakers, Mr. Paul Lee, the president of the Hong Kong Internet Finance Association, defines Fintech and points out the application level and technical infrastructure that facilitate Fintech business models.
Let's first start with what is Fintech. There's no concrete definition on this term. The definition is always evolving. For example, from PwC, they have a very long definition. But my translation to this definition is that whatever technology that can enable financial services, that is called Fintech. For example, you may think, whether the ATM machine, there are lots of technology in that machine. Is that a Fintech? I think so. Or the internet banking that you use every day to access your bank account, is that a Fintech? Yes, it is also a Fintech. But these are kind of traditional Fintech stuff. But there are also some much newer Fintech stuff. Like some of the terms that you may heard from news, like the ICO, Bitcoin, electronic payment, P2p. From this page, above the line, these are all the application level in the Fintech world. Below the line, there's more like the technical infrastructure that facilitate all the Fintech business models. It looks very complicated. I think every one of the terms here, it will take a 3-hour lecture for you to really understand what it is. But today, we are not going into that deep into all the terms here. But I want to share with you how to understand this kind of new Fintech stuff. To understand that, we have to think about what's the driver behind all this technology. There must be a reason for them to exist. They have to solve some real-life problem. They have to fulfill some of our financial needs so that they will be classified as Fintech. Otherwise, we do not need that at all if they cannot solve any real-life problem. So we start from this angle to understand all these terms in the future. First, our financial need, the middle part of the slide, that's never changed in the past 100 years. We need to give money to our friends, give money to when we buy something. Money transfer is the basic need, our financial need. We need to borrow money occasionally. We need to deposit or do investment. We need to raise funds if we are setting up a company, like we want to go public. These are all the basic financial needs that we have in the past 100 years. It's never changed. In the old day, we have some old solution on the left side. For example, if you want to pay, then you can use cash, you can go to the bank and do bank transfer. If you need to borrow some money, you can use credit card, bank loan, all that kind of stuff. If you need to raise funds, of course, the stock exchange will be the place that you go to raise equity. But because of the technology advancement, we can do much more than that, or doing these old things in new ways. For example, if you want to transfer money now, because of the technology, the Fintech, we can use Bitcoin to pay the same transaction. We can use the mobile wallet, so you do not need to actually pay the cash or go to your bank, log in your bank accounts to do the transfer. And if you want to borrow money, in addition to go to bank, then you can go to some P2p lenders. You want to do investment, there's even more choice. You can always go to internet broker to buy and sell stocks. You can buy wealth management products on internet. So because we have some new technology, therefore we have some new solution to solve the old problems or fulfill our old needs, old financial needs. That's the underlying framework that you can keep it in mind. So whenever you see a new terms, you need to first ask the question, what problem is it trying to solve? Then you will have a much easier time to understand that. Because the financial need, at least in the middle, I think every one of you can understand very well just how we can tackle this kind of needs. And Bill Gates has done a very good job in summarizing this thing. Banking is essential, banks are not. Meaning that the banking services or the financial services is essential to every one of us. But we may not need a bank to help us to solve this problem. We can have other company or other organization to help us to solve the same problem. And let me give you one concrete example. For example, P2p lending. Have you heard of this term? P2p lending is very, very popular business model right now in China or in the US. The basic business model is very simple. There are many people who want to borrow money. They are borrowers. There are many people who want to invest because they have spare cash. In the old day, the investor, if you have spare cash, you will go to the bank and do deposits or go to do other investment products. And in the old day, if you have the borrowing need, then you go to a bank, then you borrow the money, you fill in all the application form. Usually, you can get less than 1% deposit rate from the bank if you put your deposit in the bank. Usually, you will pay around 5%, for example, in Hong Kong, to borrow some money from the bank. If you are using credit card, the interest rate is even higher than 20%. There is a gap between these two interest rates. One is 1%, one is 5% or 20%. The difference is the margin that the bank is earning. Of course, there must be some cost behind this margin. For example, they are taking the risk. The bank is taking the default risk of the borrower. And then they are also taking the tenor mismatch because the deposit, you can take it out anytime. But the loan, if a bank gives the money to someone, they have a fixed tenor to get back the money. So there is a timing mismatch. So that's the old solution that we have to solve the deposit and the borrowing side. But because we have the internet and a lot of new technology right now, so we can have internet platform to do the same thing in a more transparent way. Lending Club is the largest P2P lender in the US. And what they actually do is to set up the web page. We call it marketplace. So whenever you want to borrow money, then you just go to register. You input all the your personal data on it. So they will have the risk assessment model to calculate a risk score for this particular borrower. And then this particular borrower will be shown on the website. So if you have spare cash, you would want to invest, you can go to that website and see which one you feel more comfortable. Or you want to invest in a portfolio of borrowers. For example, this platform is trying to solve 4 problems, or I would say they add values in 4 different aspects. In the old days, if you want to earn this interest margin, what can you do? You probably cannot do anything. Because first, you do not know, if you have spare cash, you do not know who want to borrow money because your social circle is relatively limited than the bank's access circle. Therefore, the first thing, information. You do not know who want to borrow money. The second thing is usually a borrower will want to borrow the money for a certain period of time, like 1 year, 3 years. But you want to invest in a shorter period. You want to get back the money anytime you want. There is a tenor mismatch. And also the amount is also a problem. The borrower may want to have 1 million loan, but as a normal investor, you may just want to invest $10 to this particular person. Also, even if you know someone who wants to borrow money, you do not know how to access the risk because you may worry that person may not pay you back. So Lending Club is trying to add value in these 4 aspects. First, it is a marketplace, internet website, so that they can display all the information about the borrower. And the second thing is that because of the internet effect, the platform can access to hundreds or millions of users. So each of the users, they may just want to invest a very small amount, like $1. But if you consolidate all the investment, that will become a very material number. So this material money, amount of money, can actually fulfill quite a number of borrowers' borrowing requirement. So that solved the amount problem. And also for tenor, because, for example, you want to invest for 3 months, then 3 months after, there must be someone who wants to invest for 3 more months. Then that will become a 6-month cash to lend out to someone on the platform. They will also do risk assessment for you to give all the borrowers a risk score. But the way they are doing this risk assessment is quite different from the banks are doing. For example, they will ask for your social data as an input factor to their model. Because you can imagine in traditional bank, if Bill Gates go to try to get a personal loan, he probably cannot get any personal loan because his salary is just $1 per year. He don't have any salary proof. So if they don't know this is Bill Gates, they will think, oh, this is very low income individual. They cannot offer anything. But in the internet platform, because they also use the social data to do the risk assessment, for example, they will see, oh, Bill Gates' friend is Donald Trump and also Elon Musk, that kind of very high profile people. They will think that the default risk of this particular person is relatively lower than a normal person because they have the reputation to hold. So normally, they should be able to repay the money. Therefore, I should be able to lend them money in a lower interest rate. Therefore, the internet platform is trying to get more data about this person and then use this data to, or I should say to monetize this data to help them to lower the interest rate or to increase the loan amount that we are willing to give to this person. So this is one of the examples that the new technology are changing some of the old business model. So if you have spare cash, you have some alternative way to invest it right now. If you want to borrow money, you can go to this kind of platform. And the good thing about this is that as an investor, you can get more interest return because the platform will usually offer you higher interest rate than a normal bank deposit. And for borrower, you can usually get the loan in a lower interest rate, usually lower than that from a bank. So after talking about some general framework to understand fintech, I would like to share with you some of the global trend about this industry. At the beginning of this industry, like in 2013, a lot of startups come to say, I am doing fintech, I am going to do a financial revolution. That's classified as competitive business model. But as the market continues to develop, more and more companies are doing collaborative business model. Collaborative meaning that they're working together with the existing traditional financial institutions to offer them some additional service to earn money instead of competing with the traditional banking industry. Also, at the same time, fintech is not just about startups. There are so many traditional financial institutions investing a lot in this industry, in the fintech area. Therefore, it also opened up a lot of new opportunity for all the students. If you want to go to some big banks, fintech is an area that they are hiring a lot of people. For example, in ICBC, the world's biggest bank, they have decided no more physical branch, but using the internet channel. In this process, you can imagine they will need to hire a lot of fintech people to help them to facilitate this strategy. And all the big investment banks and then insurance company, they are investing heavily in this area. And also, fintech is quite diversified right now. It's not just about financial institution doing financial stuff. That's past. A lot of non-financial institutions, like the e-commerce companies, social media, like WeChat, Facebook, Google, they are also doing quite a lot of financial services. Therefore, in the future, if you want to go into this financial industry, you have much more angle than before. You can join a social media company. You can still doing finance for them. For example, I myself is joining an internet company, Alibaba, who is doing e-commerce. but I'm doing finance project inside. So you will see much more opportunities like this later. A global investment trend is also changing. When we talk about fintech, we usually think, oh, it's a very hot topic. A lot of people are investing in that. But that's true 3 to 4 years ago. But nowadays, the industry is getting more mature. You can see the total equity investment through VC and PE is slowing down. And the number of deals in this industry is also dropping. The main reason is that a lot of fintech companies, they are already pretty big now. They are very mature. They have much more funding source than before. They do not need to go to VC or PE to get the funding. For example, many of them just get IPO in the US and also in Hong Kong. So that's not included in this statistic. And some of the subsectors in the fintech, there are some clear leaders already. So the clear leaders can consolidate the whole industry quite quickly. So the number of players in the industry actually reduced quite a lot. For example, in the payment industry, e-payment industry, in China, there are only 2 left. Originally, there are more than 100, but now there are just 2, WeChat and also Alipay. And when we talk about fintech, it is a very diversified idea. It's much more than P2P, crowdfunding, and e-payment. These 3 are relatively more mature, but there are some rising stars like InsurTech, RegTech, and robo-advisor that you may want to spend some time in doing research because that is upcoming. The investment to these 3 areas are increasing quite quickly. And at the same time, fintech is not about all the developed worlds like US, Europe, and Hong Kong, this kind of developed economy. It is more adopted in the emerging market. And that means quite different things in different countries. For example, e-payment. From our understanding, e-payment is talking about using our smartphone to do the payment in a shop. But in Africa, that means something very different. In Africa, because they do not have many smartphones, they usually use Nokia or that kind of old phone. So they send a message, SMS message, to some phone number. Then they will have someone, physical person, to ride a motorcycle to bring the cash to you. That's the e-payment in Africa's context. So that's very diversified, and not just about developed countries. We have talked about how fintech is changing the world, a lot of upside, but every new things, they have upside and also downside. I hope that all of you can understand that there are some risks associated with this new fintech stuff. For example, these 2 are very popular crowdfunding projects put on the internet, one in Indiegogo, one in Kickstarter. But at the end, they all failed. And there are quite some issues around this crowdfunding business model because you cannot control how the creator, the project owner, use the money. And they can create fake contributors. And there are also infringement of the patent. Therefore, these are the problems that we need to fix before this industry can really further develop. And you can see a lot of regulation change these days in many different countries to tackle these kind of problems. And not just about crowdfunding, about P2p lending, Bitcoin, ICO, there are a lot of bad news around that. But technology itself is a neutral thing. So this is all about how we use it to improve our life. So when this is a new thing, we do not have regulation, we do not have law, do not have procedure. So gradually, we will have that ready. Then this technology will be very beneficial to us. We talk about the global trend. How about in Hong Kong? We do have some disadvantage, seriously. But at the same time, we also have some advantage. The fact that we have a small local market, we lack of IT people, we have plenty of bankers, plenty of lawyers, plenty of risk control people. Because at the end of the day, fintech is about finance and also technology. We need to have talents from both sides. And then because the legal framework in Hong Kong is very good and very transparent, that's a very good testing place for your fintech idea. For example, if you have an excellent idea, if you go to China to test it, someone will copy it very quickly. but in Hong Kong, you are more well protected. And also the cross-border opportunity. If you start your fintech idea in Hong Kong, you can probably explore the overseas market quicker than you start this business in somewhere else, because we have the Bay Area initiative. We have a very close connection with the China market and also the other Asia one-by-one road market. We have talked about the past of fintech and then the current situation of fintech. The last part is to talk about the future of fintech. In all the existing fintech models, we are trying to break down a bank and unbundle a bank into different small parts. Like the lending, we take it out as a P2p lending. The equity part, we take it out as an ICO or crowdfunding. But next, what we would do is to reassemble it into a bank again, a full financial services provider. Therefore, there are some companies trying to do that, something called banking as a service, or you can call it an internet bank. Because by using fintech, you have break down all the financial services into different small modules, which is very portable and very scalable. So now if you want to resemble a bank, that's much easier than before. For example, in the old day, you want to build a bank. That's probably not a startup project, and you need to build the system from scratch, and that takes a lot of investment. But because the fintech has built a lot of different modules for different financial services, you can just pick and choose, and then pick the one that suits your business model, and then resemble it. It becomes a very niche internet bank. And in this banking as a service area, China and US are moving very quickly. For example, the BAT, the three biggest tech giants in China, they all has their internet bank built already. So this will probably be the future banking model. So that's the end of my part. Thank you.
In the second presentation, Ms. Frankie Tam, the Vice President of the Hong Kong Internet Finance Association, continues and elaborates on these fintech topics from a regulatory point of view.
And I would just want to highlight some of the topics that are emerging from a regulatory angle. And after highlighting some of the key topics in fintech, I would like to pick one of these different topics that I briefly touch on and zoom in to see what e-payment regulations are in Hong Kong. A lot of circles here. So some of the keywords are actually touched on already by Paul. So crowdfunding, as Paul said, basically is about raising capital or raising support or resources from large group of people. When we see from the regulatory side, instead of suiting the needs and building a business model to solve problems, a more regulatory approach would be balancing interests of different parties. Crowdfunding sounds perfect. I am here, I have some needs, I want to source help from the crowd. So that's all the interest that I care about. But what are the concerns or risks behind that the regulators or the regulations should be in place to protect? And second topic, mobile payment. So Paul also talked about some mobile payment options already in place in China, in Africa, sending an SMS message and somebody bringing cash to you by motorbike. Mobile payment is something that you use every day, and have you thought about if the protection has been afforded to you or the risk behind? And privacy, what do you think of it? Do you believe in privacy, the concept of privacy, or do you think at this advanced internet age, we don't really care about privacy anymore because there is so much convenience behind sacrificing some kind of lessening your privacy protection? And then the blockchain is actually one type of technology that warrants a whole course to explain. And with this new type of technology, which is distributed ledger, just decentralized, would you want to have special regulations to help them? And virtual banking. Hong Kong is a highly banked population. I think like all of us have a bank account. And if you don't have a bank account, it's very difficult to live in Hong Kong, right? And if you go on the streets, you may actually see like two branches of the same bank on the same road. With that kind of strong banking background in Hong Kong, what is virtual banking? It is talking about banking services without brick and mortar branches. Do you see in 10 years' time, 5 years' time, you go down the road in Hong Kong, you don't see physical branches anymore, but everything is virtual and online? And if it happens, do you want to see the protection, and what kind of protection? Do you see it coming, or do you want it coming? And mobile wallet, slightly different from mobile payment in that it's like you want to store your value there. Instead of just, okay, there is a payment option of processing the flow of capital. If there are technology facilities for you to store your money there, are you happy with it? Do you feel secure? Cybersecurity is closely related to the concept of privacy because you want to protect your data and your personal information as well as the system, not just about your personal information. And cybersecurity includes concept, for example, you run a business and there may be people seeing that you're a competitor or they're just hackers and they want to just intrude to you. Even for when you provide financial fintech services, you have to guard yourself against this kind of risk, and there are regulations to help you on that. And Open API, what's that? Open Application Program Interface. That means actually a concept that is promoted to different programmers and companies for them to encourage them to open and let other engineers to kind of interact that different software together instead of close it off. And then crypto access, very hot in last year especially. We'll touch on it more. And RegTech, regulatory technology, basically is technology addressed, especially developed to address for the financial institutions or financial companies wanting to comply with their regulatory needs. And then InsurTech, Paul's touched on. And we have, of course, when we come to money, there must be anti-money laundering regulations. Oh, a lot of words here. You don't need to know in details about them. What it is about is it covers some of the local regulations about what are there to regulate crowdfunding. Basically, we don't yet in Hong Kong have specific regulations that target about how crowdfunding should take place. And we have 1, 2, 3, 4 Hong Kong specific regulations that really touch on if you want to do debt crowdfunding or equity crowdfunding. So donation crowdfunding and rewards-based crowdfunding, there aren't really specific regulations to see, you're donating, so you have to get a license or provide certain information before you do your donation crowdfunding. But then the fifth and the sixth ones are actually not comprehensive list of the relevant regulations, but I just want you to take a look. Actually, outside Hong Kong, the big jurisdictions, the fifth one, guidelines on depositing and managing online lending is a guidelines in mainland China, which specifically touch on the P2p payment space. As we were in Hong Kong, we want to look at how mainland China want to open up or regulate or see how the business should be carried on, especially on the crowdfunding fund. And then the last one is short form for JOBS Act, Jobs Act, which is a new piece of legislation in the States where the USA see that, okay, we know that there are risks here where a person do a startup and ask people for money as investors, you may not get enough protection. If you follow the traditional investment schemes, then it will be a lot of burden on the startups to convince and comply with the requirements to put on a thick book to tell you what I am doing and get your money, do all the registration. It will wait for 3 years after everything is done. So Jobs Act is actually about US government saying we need more entrepreneurs, we need more investments, we need more business. So this relaxes the requirement for startups and companies to raise capital or raise debts from investors and say, oh, if you comply with certain basic requirements, if you are just raising less than $1 million per 12-month period of time, then the requirements are really relaxed. So there are measures for some big country that actually, where do you see? Do you want to protect more public interest on investment, or do you want to stimulate more ideas going? Is there always a balance in that respect? We talk about privacy, and people say technology killed it. I was told that many of the university students nowadays do not use Facebook anymore because it's the parents' generation application. But recently, you may notice that there are concerns about how big social network company like Facebook are using your your personal data. If you are already using different kind of social network or giving, like volunteering or giving your personal data to these big corporations, are you concerned or you can't be bothered? If you really think privacy is dead, what do you think the value of providing free service to you in exchange for your data then? 50 years ago, when you look at the big magazines and statistics, the big top 10 companies in the States are infrastructure, steel, and energy company. They provide automobiles, heavy machines, energy products, and at that time, it's about doing big machines, selling to the world, and at that time, oil is oil, energy is energy, and that is your money. We're in a digital revolution age where that's been saying data is the new oil, and who owns it? Do you think that you own your data? And this topic is highly relevant to fintech services because we use a lot of data in providing financial services. This piece of news is relevant to cryptocurrency. Do you know about WannaCry? So what is it? So one day you go to the office and on your monitor you see the screen. Basically on the left you see, okay, time left. 2 hours, 23 minutes, and say, okay, there is a message. If you want to log into an account and see through what is in your database, please do as follows. Basically, you pay a ransom, and the ransom ask can be a big sum of money in the form of cryptocurrency or fiat money. And what do? It is a worldwide attack at that time, and it attacks not only financial service company, fintech companies, but also government institutions, including the hospital authority in the UK. And there was life and death matter in terms of even if the doctors want to check the medical record there, they cannot because it's locked there. Cybersecurity is important in that if you do not have regulations to require certain measures put in place, no matter how great your service is, no matter how great your idea is in, how established your client base is, you cannot proceed. It's just got frozen there. So we do have some local regulations here, and we have in Hong Kong Personal Data Privacy Ordinance, and there are ordinances that actually help and regulate businesses as to whether they should call you to sell you products. If you want to do a business and start up, when you send out a marketing message, should you include certain information and provide the recipient with certain options to unsubscribe? There are requirements in Hong Kong in that regard. And you may understand that Hong Kong actually has one of the most privacy-forward and advanced regulatory regime in Asia. So we have our Personal Data Privacy Ordinance back in 1996, so it's approaching 22 years. And across Asia, we have one of the most advanced jurisdictions. We have a lot of tested cases, and Hong Kong people are generally very conscious about their privacy rights. While you check your personal data, you're not happy, you know where you can go to. You can go to complain to the Privacy Commissioner, and if you receive any unsolicited SMS messages, phone calls, you have your rights. You're very aware of that. If you are doing fintech services, you may have to comply with sector-specific regulations. For example, Hong Kong Monetary Authority, Securities and Futures Commission, and other industry like Insurance Authority have their specific guidance where you have to follow on top of the basic regulations. And besides Hong Kong as a very privacy advanced place, Europe is very conscious about protecting privacy rights, and you may read a lot when you read the news recently that there is the European Union's General Data Protection Regulation, GDPR. Just bear in mind that EU is one of the most privacy advanced area where they actually requires any data or tech company to expressly ask for your consent before they get any information from you. Not only to inform you what they would do, but they need to put in place what you consent. It's like almost like contract. It's like before you get to us, it's a lot of confirmation and protection. Crypto access, like some concepts on crypto access. So when you look at regulations, you look at exchanges. Basically, cryptocurrency exchanges where you use the fiat money, Hong Kong dollars, US dollars, to exchange for crypto tokens like Bitcoin or Ethereum. There are regulations there. And then there are some mining activities. It's like, is this cryptocurrency is an interesting space where it involves computational power to resolve some questions, and then by giving your computational powers to solve some equations, you get new cryptocurrency. For example, if you're a miner, you get more Bitcoin. So miner doesn't mean you take your industrial tools and deck on the ground, but really just contributing your computational power by your hardware. And there are regulations on ICOs, and one key concept you may want to understand is cryptocurrency is quite different from the concept of digital currency. So digital currency is a broader concept. It can be your Asian miles stored in your account. If you take it as a currency to redeem your goods, then it's a digital currency, but it's not a cryptocurrency. Cryptocurrency is something that you use the cryptography, which is a technology to anonymize the owner or holder of it, so that you're protected from disclosing identity online. And also it's decentralized in terms of like your data is on the web instead of on the ledger, instead of centralized in one position. So what is this madness? This is basically mining machines for cryptocurrency. So mining, the concept is about solving computational equations to get new cryptocurrencies from the systems. And this takes a lot of energy and needs a large area and also well air-conditioned room for any mining to take place. You may know that we talk about big area, cool weather, where there's a lot of machines running for the mining, and not very labor intensive. For Hong Kong, very expensive piece of land where you don't even have enough storage space. You may find it like very difficult to do the mining, where the same piece of land may be justified for doing other businesses. So, for example, as of last year, in 2017, the mainland China account for over 70% of the crypto mining operations. Guess where the mining businesses are concentrated? Cooler areas, less expensive land, and yet you find it quite concentrated on a few spots. But this is no longer the case because the news earlier in January this year said that mining activities is banned totally. And this is the last year's picture, but you notice that even if China is out of the picture, where the mining companies would want to start their business into. Digital currency, again, there is some news that where some government, even Chinese government is saying, well, cryptocurrency, initial coin offering is a high-risk investment activities, it should not be encouraged at this stage. That doesn't mean that they rule out the picture of digital currency, again, which is a very different concept. But we do not know yet the details or the kind of digital currency is. But again, fintech, you cannot just say, oh, there is risk, and we don't do anything. And even government is taking the initiative in doing that. Just to give you a concept, besides the cryptocurrency, there are crypto assets, for example, CryptoKitties. Many of you are very young, but once upon a time, there was something called Tamagotchi, where you may want to give some attention and care, tender and love to your Tamagotchi, play with them, and then it grows, becomes something really like grown up. And CryptoKitties is a crypto asset. It's a computer games built on blockchain technology. And what you do is that there is one of a kind, unique CryptoKitty in the world, and you can buy this CryptoKitty by paying Ethereum or Bitcoin, paying cryptocurrency, and online you become the owner of a CryptoKitty, and then you feed them by energize your CryptoKitty by giving more cryptocurrency, and these CryptoKitties have genders like male and female. If you own a male and one female, and they can breed and provide CryptoKitty babies. So what's the point of it? They're not currency. We're just saying fintech services have evolved to a point where cryptocurrency is no longer just a concept. It is a market where not only do they think it is a currency, they think there are secondary product market that can be built on it. And do you think it will be successful? It became wildly successful, and people bought CryptoKitty and just nurture it, look after them, and they have secondary markets as well. The news says that they can be sold as much as US dollars over $100,000 per CryptoKitty. So you can see the crypto space is building, and in fintech area, you can't just ignore this. And this is an example of regulations of crypto space. This is the certificate of the bid license. So in New York State, the government actually regulate if you want to open a crypto exchange, and the government will issue a certificate to this company wanting to carry out this crypto exchange business. And so far, there are 3 companies that successfully get licensed. We have, to zoom in on e-payment, I will be very brief on that. On the evolution, Visa is a concept back in the 1950s that was confined to a very prestige and limited and privileged, well-off group of people. And for some time before the internet came into place, Visa is a thing for e-payment. And then in 1990s, we have the sensation of Hong Kong, which is the contactless payment Octopus, and PayPal in the States, where it allows you to send payment over just an email address. And in year 2000, with Alibaba, the e-commerce become so successful, they think of the ways to handle so many transactions each second over the world. And then Alipay came into place, and more recently, we have kind of more players into the market. When Paul said there are 2 big players in mainland China, Hong Kong is better. Hong Kong has 13 licensed e-payment platform. So we see the trend that we used to only do device-based, which is like you have to have a card with a magnetic tape behind before you can do e-payment. Now it's non-device-based, an application not even stored on your phone. There may be an application stored on your phone, but data is somehow in the cloud, in the sky, out there. And then once upon a time, e-payment is all about getting your consumption, C2B. Now it's P2p. And 2 leading technology on the e-payment, the near-field connection NFC, basically is kind of the global standard where you do contactless payment. It's like Octopus card, you beep, and then you pay. And the other one is QR code, which is highly common and successful in mainland China because of the low cost. You don't have to buy the chip to install in anything. You just print out the QR code. The technology is still fighting with each other as to which one should dominate. We said we have Octopus, PayPal, Visa card, etc. And for a long period, we don't have specific legislation in Hong Kong to regulate how these e-payment players handle our money. But the good news is, since 2016 November, there is this new piece of law, which is Payment Systems and Store Value Facilities Ordinance, which basically said if you want to run an e-wallet or e-payment system, you have to get a license from Hong Kong Monetary Authority. So it's not just banks that are regulated anymore. You're just a technology company or just an engineer writing an app. Okay, you now have to fulfill certain requirements. There are exceptions from getting the license from Hong Kong MA. For example, if it is for limited purposes or within a small group of companies, for example, if you get a Starbucks card and you only use it in Starbucks, then would Hong Kong Monetary Authority want to get license from all of these players? Probably not. Basic requirements about getting the e-payment wallet license. Your company should have at least 25 million pay-up capital. So it's kind of making it more difficult than in the past where you have a few million and write your app because it involves taking money from the public. And you have to have sound governance plan and independent non-executive director. And senior management should be residing in Hong Kong instead of like remote Indiana Ocean startup company getting your money. You may be aware that the payment, for example, Alipay wallet, you doing online transactions, now tying up with local retail chains. You see more and more of this. I'm sure you're aware when you go out there are loads of promotion. And it may actually change the habit of how you do. See, I used to like more NFC, beeping the card. Now it's like, okay, now I scan your code. It's like the technology is changing. And also the integration of devices. Your phones combined with your Octopus, etc. So these different players of providing e-wallet, e-payment are cooperating with each other instead of competing each other. As Paul has mentioned, we have a trend where once upon a time traditional finances dislike the concept of new players, disruption. You're disrupting the order. Now is let's embrace it and work it out. And thank you very much.